Hi, I'm Brendan Casey, General Manager Investments with Rest. Welcome to our quarterly investment update. This quarter sees the 10th anniversary of the collapse of US investment bank Lehman Brothers, an event that ultimately led to the global financial crisis. Fast forward to today, and the US recovery is now the second longest on record, with pro-growth government policies benefiting corporate profits and encouraging business investment. The US share market continues to lead global markets, thanks to this buoyant economic backdrop with record low unemployment and rising consumer confidence. Over the September quarter, global financial markets went from strength to strength, proving remarkably resilient. Despite escalating US-China trade tensions, the prospect of higher interest rates, and declining housing prices here at home. But share valuations are now back at pre-GFC levels, so it remains to be seen just what lessons the markets have learned from those cataclysmic events of 10 years ago. Rest's core strategy posted another solid quarter, with gains of more than 2% for the period ending 30th September 2018. Over the last 12 months, the core strategy has returned nearly 9.4%, well above its return objective of inflation plus 3%. For our Rest pension members, the default balance option returned over 1.7% for the quarter, and more than 7.2% for the past year, again outperforming its investment objective. Once again, overseas shares made the biggest contribution to Rest's performance, with US stocks leading the way and posting new highs. Our investments in property also made a notable contribution to overall performance. The Australian share market, however, contributed more modestly, underperforming its global peers thanks to higher petrol prices, record household debt, and softer housing prices, denting confidence in consumer spending. At Rest, our focus is on protecting your investment against adverse risks and preserving your super savings through the ups and downs of investment cycles. The outperformance of our core strategy compared to other similar investment options in the post-GFC years clearly demonstrates why managing risk is so essential. While global growth remains solid, it's important to remember that economic expansions don't last forever. With ongoing global trade tensions, the potential for inflation and interest rate hikes in the US, and a cooling housing market here in Australia, we think it's important to be vigilant about risk and not remain complacent. So we see good reason to keep our relatively defensive core strategy positions in place. Rest currently holds around 42% of the core strategy in Australian and overseas shares. Around 13% of the core strategy remains in cash to ensure we're well positioned to take advantage of opportunities that will arise as markets correct, like buying shares at cheaper prices to yield higher returns later. We believe this philosophy drives us towards our investment goal of growing our member savings by delivering net returns above the rate of inflation over the long term. That wraps up our investment report for this quarter. Thanks for joining me, and I look forward to next updating you on how your investment with Rest is performing in the new year.